Good morning friends, welcome to Sharekhan pre-market view. Indian markets yesterday were down quite a bit. In fact, we had a cut of about 32 points on Nifty and 135 points on the Sensex. This was on the back of profit booking and nervousness ahead of the RBI policy, which is likely to be today. Even the global cues went quite good as well because most of the Europe as well as Asia was down yesterday. If you look at the US market, yesterday US market too had a very nightmarish kind of a day with Nasdaq crashing by 65 points and sell-off being seen across in most of the technology stocks. Even Dow had a cut of about 51 points and S&P 15 points cut yesterday. This was after the Black Friday sales number which came in quite below estimates, as well as the PMI data, especially on the manufacturing side from China wasn't positive at all. So overall bad data points in the globe causing some nervousness in the markets out there. If you look at the Asian markets currently, they are also down today. Japan in specific down today after Moody downgrades the country's rating by 1 notch to A1. So that market is down. Singapore Nifty currently, if you look at it, is indicating a negative opening by 35 points. So we have a bad morning to begin with. However, if you look at the flows, they aren't as bad as markets are indicating. If you look at the FI flow yesterday in the cash market, they were sellers to the tune of 15 crores. Whereas on the index future side, they were short by about 304 crores. DI continued to remain a seller in the market. They sold about 555 crores of shares in the cash market. Now, ahead of the RBI policy, how Nifty is placed after this gap down opening, let's have a view from Sadhana.
Good morning friends, let's have a view on derivatives. The Indian benchmark indices witnessed a weakness in yesterday's trade, as we have seen that Nifty started the session on a flattish to negative note, and it was continued to trade oscillate between positive and negative territory with multiple number of times, but with negative break. And we have seen that selling was witnessed across the board, and many of the blue chip counters like ONGC, Jindal Steel, Reliance Industries, Hindalco Industries were trading with negative bias, due to which Nifty has broken the psychological mark of 8,600 and hit a fresh intraday low at around 8,590 odd levels, and finally ended its session with a loss of 0.49% at 8,595.90 levels. In this period, we have seen that long positions were squared up by market players, as open interest is decreased by 0.67% from 2 crore 33 lakhs to 2 crore 31 lakhs. Approximately 1.57 lakh shares were reduced in Nifty futures, and Nifty futures price decreased by approximately 40 to 45 rupees. On the other hand, cost of carry also decreased by 9.40% from 8.19% to 7.42%, and Nifty futures premium decreased significantly from 50 points to 40 odd levels. On the options front, in spite of market was down, we have seen that marginal uptick in PCR. It was increased from 0.90 to 0.91. In yesterday's trade, we have seen that put option has added around 24 lakh shares in open interest, whereas call option has added around 21 lakh shares in open interest. India VIX was up by 2.33% from 12.90 to 13.20%. In the options activity, we have seen that 8,600, 8,700 and 8,800 call option has added good number of shares in open interest. Currently, 8,700 call option stands with highest number of shares in open interest. In the put option activity, we have seen that still 8,500 stands with highest number of shares in open interest, followed by 8,400 and 8,300. So from options activity, we can understand that 8,500 might act as a strong support going forward. There is no security in band period today. Yesterday, FIs were net buyers of 55 odd crores in future and options segment. They were net buyers of 304 crore in index futures. They were net buyers of 7 crore in index options. They were net buyers of 350 crores in stock futures, and they were net buyers of 2 crore in stock options. Our 5-day CVM stands at 8570. Lower range for the market would be 8,500 and higher range would be 8,720, which is our monthly strategic breaking point. Currently, Singapore Nifty is down by 36.50, which is at 8563. Currently, it is trading below our VWAP of 8570. So we may see a huge volatility in today's trade ahead of RBI's policy. That's it from derivatives. Thank you.
friends, let's have a look at the trading ideas for the day. First one being IRB Infra. Now, as per the recent notice that IRB has put on its on the BSE website, IRB Infrastructure has started collecting toll on the Pathankot Amritsar toll road. Now, company had spent close to 1445 crore on this lane, and starting of the toll collection from 28th of November is positive for the stock. One can long IRB on this news with stop loss of about 262 for potential upside of 282 and above that at 287. Also friends, Fitch has revised rating of Reliance Industry upward to stable. Now this is extremely positive news for Reliance, especially sentimentally, and one can long Reliance Industry with stop loss of 952 for potential upside of 982. Moving on to the news section. Today is all important event with all eyes on what Dr. Raghuram Rajan will do. RBI will release its bi-monthly monetary policy today, and in all likelihood RBI is likely to keep key rates unchanged. This is as per the Bloomberg consensus. However, what is going to be more important is the tone of RBI, which we expect to be dovish, and the key monitorable would be how RBI governor's take would be on the correction in the crude price, drop in the headline inflation number, and his guidance on the future policy action. Also friends, core sector industry, which forms about 38% of the IIP, reported a growth of 6.3% in the month of October compared with 1.9% growth which was released in the month of September 2014. Also the PMI data for November came in at 53.3 versus 51.6 in October. Clearly this data, both the data are showing an uptick suggesting revival in the manufacturing sector, which is positive for the overall economy. Also friends, as per media report, the government has proposed to implement GST from 1st April 2016, and the new Finance Commission may set up ahead of its schedule to look into the issues relating to the new indirect tax regime. As per the Finance Ministry, the government is likely to introduce GST bill in the current session of the Parliament after the Empower group of Cabinet Minister meeting on December 12th. Now, in case this is done, this is extremely positive for FMCG and logistics sector. Also, NHAI has received close to 15 to 16 bids for the 2000 crore Delhi Panipat road project. Now this is extremely positive news for all the players like IRB Infrastructure, ILMFS, Transportation, Ashoka, Buildcon and Satcom Engineering. Also friends, SAIL has offloaded full stake in its Bokaro Cement JV. The company will get close to 235 crores from this sale proceed. HDFC Bank's proposal on foreign investment cap goes to CCEA, that is Cabinet Committee on Economic Affairs. At present, the foreign investment of up to 49% in banks is done through automatic route. However, the proposal to hike any limit at 74% will require CCEA's approval. Looking at the stock watch list for the day that we have, now the stock from positive bias from trading point of view, we have CSE, TVS Motor and Exide Industry, whereas stocks which one can short from intraday trading perspective, we have Coal India, Motherson Sumi and Infosys out there. That's all we have in today's session friends. Thanks and have a nice trading session.